Hey everyone, welcome back to Corporate Decoder, the place where we dig into company reports so you don't have to. Today we're diving into a report from Altex Industries, a company that's trying to strike oil but maybe finding more red ink. You'll see what I mean in a few minutes. This report gives us a peek into Altex Industries' performance up to March 2025. We'll be looking at their financial health, what's been going on with their operations, and whether they're swimming or sinking. It might surprise you, XCU, if you appreciate getting straight insights from these corporate documents. Make sure you're subscribed to Corporate Decoder. We also have a Discord community linked in the description below so you can chat with other smart folks about these companies. First things first, this is a Form 10Q, which is a quarterly report that public companies have to file with the Securities and Exchange Commission, or SEC. It's like a snapshot of how the company did over the last 3 months. This report covers the period up to March 31, 2025, so it's relatively recent information we're looking at. Altex Industries is a company with the file number 19030. As of May 2, 2025, they had 11,029,520 shares of common stock outstanding. This is just a count of how many stocks the company has given to the public that they are aware of. Let's get to the financial statements. We're going to focus on the balance sheets first. They have about $26,007,000 in cash. This is cash and things that are almost cash, like short-term investments. Accounts receivable is $3,000. Accounts receivable is money owed to them by customers who bought their product on credit. Other current assets is $7,000. This is just a bucket with small amounts of money that are not categorized anywhere else. Adding all these up, their total current assets are $2,607,000. Current means it can be quickly used within a year. Now, Altex has oil and gas properties that are proved to have oil which are valued at $311,000. Basically, land they have that has oil in it. But there's something called accumulated depreciation. This is money that they have already deducted from the value of the oil wells due to use over time. That amount is $280 oil, the oil wells due to use over time. That amount is $287,000. After subtracting the depreciation, the net value of their oil and gas stuff is $24,000. They also have something called a right-of-use asset valued at $181,000. This is from a lease agreement, so they have the right to use something, probably office space. Now let's talk about the other side of the balance sheet, liabilities and stockholders' equity. This is money they owe or money they have in the company. First, accounts payable are at $2,000. This is like company debt, bills they haven't paid yet. Then they have a current operating lease liability of $35,000. This is payments that they have not yet paid. Accrued expenses, related party is $1,235,000. This is expenses they owe to someone related to the company, maybe an owner or family member. Other accrued expenses are $6,000. Accrued expenses are expenses that they owe but haven't paid yet. In total, their current liabilities are $1,278,000. That means they owe about $1,278,000 soon. They also have a long-term operating lease liability of $146,000. This is a lease that will be paid over a longer period. Total liabilities adds up to $1,424,000. That's all the debt and obligations they have. Okay, now on to stockholders' equity, which is the owner's stake in the company. They don't have any preferred stock issued. Preferred stock is like a special class of stock. Their common stock is valued at $113,000. This is basic stock that most people own. They have $13,693,000 in additional paid-in capital. This is money investors paid above the basic stock value. But here's a big number. They have an accumulated deficit of $12,408,000. This is the total losses they've had over the years. Not great. Overall, their total stockholders' equity is $1,998,000. If you add the company debt and equity together, you get $2,000. Next up, the income statement, or as this document calls it, the statement of operations. This shows how much money the company made or lost over a period of time. Their oil and gas sales revenue for the 3 months ended in March 2025 was $4,000. That's not a lot. Total revenue is $4,000, also not a lot. They paid $1,000 in production taxes. This is a tax for extracting oil and gas. General and administrative expenses were $61,000. These are costs to run the business like salaries and office costs. Depreciation, depletion, and amortization expense was $1,000. This is an accounting way of saying the stuff they own is getting older. Total operating expenses were $63,000. Interest income was $27,000. They are getting money from interest. Here it is, their net loss was $32,000 for the quarter. That works out to a loss of $0.00 per share. They have 11,229,529 shares outstanding. Moving on to the statement of stockholders' equity. This shows how the owner's stake in the company has changed. For the 6 months ended March 31, 2025, their net loss was $148,000. Their total stockholders' equity at the end of March 2025 was $1,398,000. Now, the statement of cash flows, this shows how much cash came in and went out of the company. They had a net loss of $148,000. Depreciation, depletion, and amortization added back $2,000. Other current assets decreased by $14,000. Accrued expenses related party increased by $87,000. Their net cash used in operating activities was $49,000. This means they spent $49,000 more than they earned from the oil business. They recognized $183,000 in assets for the right to use something they are leasing. The report says these financial statements were prepared following standard accounting rules. There is a section that says the company could face problems due to economic conditions and the price of oil and natural gas. Now let's look at management's discussion and analysis. This is where the company explains their performance in their own words. The company says they used $49,000 cash in operating activities. They say general and administrative expense increased to $211,000 because of bonus expense to the president. The report mentions that the company has controls and procedures to make sure the information they report is accurate. Now, zooming out and taking a broader view, Altex Industries looks like a pretty risky bet. On the one hand, they have some assets and a decent amount of cash, but the cash is slowly going away. Their low oil sales combined with high expenses is concerning. They depend heavily on interest income and keep accruing expenses to a related party. A real positive catalyst for the company would be to have a real revenue source from oil. The lack of it is a big weakness. The biggest risk is that Altex won't be able to turn things around and could burn through their remaining cash and assets. Ultimately, this report paints a picture of a company struggling to stay afloat in a tough industry. Alright, that's our breakdown of Altex Industries' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.